Hi everyone, Angus here. Something that I get asked quite often is how do I personally go about setting stop losses, or more so, I personally use trailing sells where the stop loss is, basically a percentage or a dollar amount below the previous high or the highest high from when I started, trading that particular stock. So what I do is, very simply within TradingView, and as always, this isn't any sort of professional advice. This is just what I do. If you need more help, do talk to your broker, and certainly have a Google around of the different types of stop losses that are available. I just personally find that trailing sells are the ones that I like, and the ones that keep me in a trade the longest and keep me out of trouble the best. So Telstra is a stock that has been sort of trending fairly well lately. And I've bought Telstra somewhere, back around here. And so the way that I set my trailing sell on it is it's very, very simple. Like, you can do lots of different ways. You can basically just say, I'm going to just put a flat 10%, 15%, whatever your broker supports. I typically set values of around 10% when my brokerage is low and the stock is fairly stable. And, I don't care too much about that stock because, I'm really after the momentum to try and get the best wins. But if it's a stock that I really do like, and if it has a bit more volatility and I want to, hang on to the trade for a lot longer, then I'll try and set a, probably around a 15 to 20% trailing sell. So the way that I determine that, half the time I'm lazy and I just put in a 10% stop and then just keep an eye on it. But if I wanted to try and trade a little bit better, what I'd do is I'd use the linear regression within TradingView. All you do is you go to your drawing tools here, you go down to the bottom, you click on regression trend. And then what I do is I just sort of say, well, here's where it started to sort of really run. So I'll put, my sort of entry point at the top of the green candle, and then I'll run it to the top of the green candle up here. And you can see that what it does is it then draws a line. You can see that throughout this period here, the stock has stayed within this line. So it's only really here, where it, had a sort of more extreme day, or, a couple of days, where it got dumped out of that range. And so if I'd had a trailing sell, between this top line and this bottom line, then I would have kept that trail, from basically the start of February up until around the 6th of May. And then I would have, gotten out of that stock. And then I would have gone back into it, and I would have held it back up until the 7th of June. So for the sake of, $25, $50 worth of brokerage, depending on what you pay, and if you're using something like interactive brokers, it's like $1 or less, again, depending on what the stock is, I don't worry about getting out of a stock to buy back into it later, with that sort of risk. And so the easy way to calculate it is, if you go down to, it might be this one here. No, it's not that one. Got to try and guess which one it is, because I bookmark these things. So see, it's got price range. So I click price range. You can see I've got a little yellow star, so it appears down here on my toolbar. So I've always got it. But if I click on price range, and I click on, let's say, the top of this, blue line roughly, and I go down to the bottom of it, and so you can see it's roughly a 6.5% range, or roughly 22 cents. So for the sake of, an 8% stop loss, I would have kept that share all the way through this period, and that would have been quite a good trade. If I wanted to keep it even more, better, if I clicked on the top point here, which is where, that was the sort of the highest high, and I click to the bottom of here, which is the lowest low for that period, again, you can see it's, roughly 6.47%. So, even within that, I wouldn't have got stopped out of my trade, because that's the previously the highest high. So, Telstra, I think I've got a 10% stop loss on it, and, I would have kept it throughout that period there, and, been very happy in the trade. And you can see from, that entry price down around about there to where it is today, is roughly a 22% gain. So that's just a very, very simple way of, picking a range that might help you when you're looking at something like a trailing sell. Another one of the stocks that I trade is WiseTech, which is WTC, I'm pretty sure. So if I look at WiseTech, and you'll see there's probably much more volatility within WiseTech, and say this was a longer term buy and hold, and let's say I bought it, roughly at the end of last year. So again, I'll do the same thing. I'll click on my I think it's called linear regression, or regression trend is what it's called here. So pretend that I bought it around the 24th of December and I saw it was going up here, and you can see that that range there looks pretty narrow. So if I go from the top of that range to the bottom of that range, so again, a 10% trailing sell would have kept me in that stock, for most of that period. But if I changed it and I said, well, I wanted to keep it longer term, and kept it for this period here. Now, get rid of this little line here. You can see if I wanted to sort of have the, stock that I just for whatever reason I really liked and I didn't care, how much it sort of went up and down over a period of time. You'd see I'd click on there and I'd click down there, and you'd see that for this particular stock, I'd probably have to have a 20 to 30%, or like just a bit over 20%, or a bit over $5 trailing sell on it. So you can see the range on that one is significantly more, and you can see that again the sort of easy way to do it is if you sort of zoom in a bit on it, you can see, well, that's the sort of highest point there. So if I clicked on that highest point there and kind of like the lowest point down here, so you can see how to stay in that trade for that particular day, I would have had to have around a 25% trailing sell, around about a $6 trailing amount, depending which way that I used it. So I hope that's kind of useful. Like, it's just a very, very quick and easy way of having a quick look at stocks and seeing what might be a good trailing sell for a particular share that will keep you in that trade through that period. Obviously, again, if you use something like this, then the best time to buy might be when it's closer to the bottom of this line, and best time to sell might be when it's closer to the top of the line. But you might use things like RSIs and other indicators for that. So again, it just depends on the range. But if I got rid of this one here, and let's pretend I'd bought it much more recently, get rid of these, just clear up the chart a bit, delete and delete. So I bought it, I don't know, the start of May, somewhere around here. I might go, give me my linear regression line here. I might go from here up to here. And so you can see it's been a little bit volatile again through this period, but if I click on the top, I click on the bottom, so you can see that, again, something like a, 12 to 15%, to give it a bit of extra wiggle room, stop loss might have been good through this period. So that's what I tend to do. Like, even if I buy high up here, I'll let the stock have a bit of a run, up and down just to see where it goes. The only other tip that I'd give you is you can get rid of this thing down here, this number, which I've never Googled, so I don't actually know what it does, but I typically get rid of that Pearson's R and I put in the extend lines, and so that way I can kind of get an idea of where in this range the stock is, whether it's at the top of the range or the bottom of the range, and therefore whether it's good value buy for me at this stage or not. And you can see that the whole idea of this linear regression is it does trade within that range. So it's likely that at some stage it will come back down, but eventually when it does come back down, you're still not very far off where you actually bought in. It's only when it really breaks through this, like what happened back here, that you probably want to get out. So again, if I went back to that one, I said, well, let's pretend I bought it here, got lucky and sold it up here. It's not what I wanted to do, wrong tool. This one, bought it here, sold it here. You can see that's my range. Measure how much that is. Going like that. Oops, what happened there? This one. Going like that to that. Again, something like a 10% trailing sell would have kept me in. I would have got out there, waited till I sort of started to see a bit of recovery, then bought back in and set another 10%, or another 10% stop. And you can see if I had another 10% stop loss in place, from the high of there, I would have got out of this trade here, roughly, a little bit higher than that, but I would have got out around about there with my trailing sell. And then if I re-entered here, let's say, if I look at the high of that one, and I've got a 10% stop loss in place again, from the high of here down to the bottom of here. So even though that's another big down sort of dip, in this share, a 10% stop loss would have kept me in it, and I would have basically stayed in that trade, all the way through here, and I'd be still making gains. I wouldn't have got stopped out. I wouldn't be paying too much brokerage, and I would have stayed in that trade all through here. So again, that's just another way that I try and protect my downside by having a trailing stop. As I said, half the time I'm lazy and I just put in an amount of around 10%, and I keep a close eye on it. But a better way to do it would be to use something like a trailing sell, and use something like your linear regression line, and then work out where the range might be. Often what I'll do is I'll actually add it as an indicator up here. So I'll go indicators and strategies, and I'll go, I think, just regression, linear regression, and so I'll have it permanently on my chart, and I'll make it something like 90 days, because I think it's always good to see roughly what the stock is doing over a 90-day period. Get rid of that, put that back in, and go OK. And then that sort of tells me over that 90-day period, that's kind of what my range is, just as an average, and that's often a good level to put your stop losses in at. And then that way, whenever you load up a chart, it's always sort of there. Get rid of that. And again, if I go from that top line down to that bottom line there, so I know that as a general rule of thumb, I'd need around about a 19% stop loss if I was going to hold this as a, very much a long-term buy and hold. But for now, I'm pretty happy that I've got about a 10% stop loss in, is what I run on WiseTech, because I try and pick a period where it doesn't have this sort of crazy volatility. I try and pick a period where it's running fairly nicely, and I'll use that as my range, because I think that's a more natural sort of level for it to run in. So at the moment, WiseTech's rocketing along, and so if I look at, given that I've got a 10% stop on it, from the high of today, roughly down 10%. So I'll be, getting out, if it drops below that $25.25 type mark, and I'm pretty happy with that. And that way I don't have to worry about support and resistance levels and getting stop hunted or things like that, quite as much as, using support and resistance levels for my entry and exits. Anyway, again, hope that was useful. It's probably rambled on a little bit longer than what I expected, but it's something that I always get asked about, and protecting your downside, I think, is much more important than, even working out when to buy stocks. Thank you very much for listening.